Well, we're back with you to take another look at our ag commodity trade. I'm Marlin Bohling, and I'm joined in studio by our very special guest, Chris Swift of Swift Trading Incorporated, based in Nashville. How are you?
Doing great, Marlin. How are you this morning?
I'm doing fine. Thanks for coming in.
Yes, sir.
Kind of a rainy week the way it looks here.
Morning, yes.
And that may impact our livestock. We'll talk about that in the next segment. But anyway, in the meantime, I wanted to take a quick look here at what the grains are doing, and then I want to get Chris's thoughts on this, what's driving the market today. So on the corn, here we go. We have the March corn down fractionally. We're down 3/4 at 373.5. July down a penny. December down a penny and a half at 397 3/4. This is a very sleepy market, Chris. Very sleepy, I think you would call it. Let's take a look at soybeans here. Which way are they going? So far, they're very sleepy too. Maybe a little deeper sleep. We have March down 3 at 911.5. We have July down 3 at 939 1/4, and you have September down 3 3/4. So we're about a penny and a half off of our low of the day here so far in that nearby March contract. On the wheat trade, you have Chicago's March contract down a couple of pennies at 515 1/4. Interesting, the new crop July is down 4 at 518 1/4. And in just a moment, I'll talk about some overnight export sales that we had too, and yet the market ignoring that. Kansas City wheat opened lower too. Here you have the March contract down 2 3/4 at 491.5, and July down 4 1/4 cents. And it's at 504 3/4. Minneapolis wheat on the March contract is currently trading at 567 3/4, down 3/4. July down a half at 574. Now to the overnight export sales that I was referring to. It was a couple of wheat sales, and yet we just covered the wheat, which is all lower. So we had 128,000 tons of hard red winter wheat sold to Nigeria, and 120,000 tons of actually, that was soft red winter wheat, I guess, that went to Egypt, the old SRW wheat.
Right.
And yet we're opening lower.
Yeah. And
what gives?
I don't know, because we even had a lower acreage on Friday for the winter wheat seedings, so a couple of million acres lower on wheat seedings.
Even lower than expected.
And none of the area has been just excellent for wheat growth. You know, Missouri was drowned out as they were trying to plant wheat, and they're still being drowned out right now. So there's a lot of issues with wheat, and we're right at the bottom end of a 3 or 4 month long trading range now. So.
And our own John Jenkinson, you know, he was back in Kansas over the weekend, and he still reiterates that it's really soggy out there, a lot of muddy conditions, which means moisture is not a problem. But he said a lot of that really late planted wheat, it never got much growth to it, and you know, it has been getting really cold out there. And he said you still can't really see much of that. And he still has to wonder about the actual acreage that we will end up with on the wheat. That could be an untold story here yet.
It very well could. And I know that some of the wheat around the world, Russia is starting to get low on supplies of some of their exportable wheats. And it's an interesting situation, but none of the commodities, I mean, none of them are moving to any extent. There seems to be very little human participation in them. There's no real outlook that says, you know, under these current tariff conditions and no real movement in our currency markets, we're in for some doldrums for a while, looks like.
Is that the overarching weight on this grain trade right now?
I think so. I think the tariff issue has probably got everyone, it's a prolonged situation. We need to move grain at least every 2 months, 3 months to generate some cash flow for the farmer. And unfortunately, he's having to do this at lower and lower prices every single time he gets ready to go to cash.
All right. Well, if you don't mind, we'll come back in a moment.
Yes.
We'll talk about our livestock trade, too.
Okay.
So don't go anywhere. We'll be right back. We're talking with Chris Swift of Swift Trading Incorporated in Nashville, and we'll talk livestock right after this. Let's go back to our discussion here that we have going on with Chris Swift of Swift Trading in Nashville. I want to focus now on our livestock trade, Chris, and we'll take a look at our prices, and we'll get your thoughts on what's going on here with all this. All right, first of all, live cattle trade. Here we go. Live cattle, we had February posting a high this morning at 127.83. Well, now it's at 127.28, so it's down a dime. April live cattle down 25 at 127.67. That's basically about a dime off of our earlier low of the day. June down 17 at 117.92. So now it's a weaker tone. If you look at the feeder cattle market, the feeders actually started out a little firmer, and they're hanging on to most of the gains. March feeders up 20 at 144.30. April up 15 at 146.05. Now, what about the lean hog trade? Well, so far this morning, it is still mixed. February up a dime. We have April down 22 at 58.20. And the May contract a nickel lower at 66.35. All June is up a dime. So take your pick there. It's up and down everywhere you go through the board. First of all, in the live cattle trade, we had livestock summary from last Friday where we had a little bit of cash cattle trade. Sounds like things were basically, what, steady, maybe a little firmer than a week ago?
It was disappointing. I know that early on in the day, some 26, 27 cattle were hoped for, and looks like 25 and only a sparse number were traded on Friday at 25. So it'll be $1 higher. The negative structure of the board right now is really good for both producers and packers. Packers can buy cattle cheaper on the front end of it, and if you need to market cattle a little bit more in the back end, you get a couple of dollars premium for that.
So where's the big void here? Because at some point they have to acquire animals, but it just didn't show up.
They do, and I'm not real sure where that particular void is, but we know that the pounds are lower. There's no doubt about that. So we will be killing more cattle into the future to acquire the same amount of tonnage out there. But I'm not real sure. We still know that the consumer is very much socked in all the rain and the snow in the Northeast. So it's pretty even battle right now, and we're not going anywhere in prices for right now.
So if they had light volumes that were purchased on Friday, at least as far as we know so far, unless we get an update coming up, does that mean they're going to have to be more aggressive this week or not?
Probably a little bit. I know that they're still working on formula and contract cattle right now, so they've still got large supplies of those. But noted, they are not as large supplies, captive supplies, what last year was. So they will come back to the market here pretty soon.
Okay, what about the hog side?
I
What's
have
the
no
cash
idea.
market?
No news coming out of China, and that scares us to death.
Yeah.
And I've heard more information last week that kind of made me not be as big of a goof off of trying to think that hogs are going higher, and they every day go lower. But still in all, it's an interesting situation, and I think that the hog market is probably still prone to go a little bit higher with what China is doing with their deficit import production.
How important is this belly market to the overall futures on the lean hogs?
Well, it's very important to it. It's a large percentage of the cutout, but it's not seasonally that time of the year. Historically, starting in May and June, we get a big belly run because of the bacon and tomato sandwiches.
Sure, yeah.
Yeah. Now, back when they traded pork bellies, that was the real deal then.
I think I would make up a fair share of that probably myself. All right, well, thanks for coming in.
Absolutely.
Good to talk with you
Always
again.
enjoy it.
I appreciate it. Chris Swift of Swift Trading right here in Nashville. So, Janet, back to you.